And Simon, Vodacom is at a new all-time high today. We're up 2% at the close at 63 Rand 90. What's afoot at the telecommunications company?
Evening, Bronwyn. I think really Vodacom scores by the fact that it only came onto the market last year, so it didn't have that 2007 stock market, which is when most of our counters on the JSE hit their all-time highs. That said, we've certainly seen in the banking sector and a couple of other places, we've seen highs, all-time highs this year. Vodacom, we've just seen activity in that TMT space. We've seen buying in Telkom. We've certainly seen it in MTN. Just a few months ago, MTN was down at 100. Up to 125, trading around the 120 level at the moment. Activity in that TMT space, and I don't think it's on voice calls. I really think it is excitement around the mobile web, people accessing the internet via their cell phones as a whole new way of thinking, and potential revenue streams, which are going to be slow at first, but which are going to be significant down the line.
The local market benefiting from a very buoyant international picture today. We've got apparently breakouts on the S&P 500, and that comes after the reweighting of the S&P 500 on Friday. Your thoughts? Are we in for some more upside from these levels?
It does look like it. I must say, I haven't looked at the chart. I was just chatting to a colleague, and he said to me, certainly breakout on the S&P 500 and on the Dow Jones. And in fact, he says on a lot of exchanges around the world, not on ours, but we're going to follow them if they have. And it does seem to indicate there's a huge amount of enthusiasm out there. We've got commodities all moving higher, and just general buying left, right, and centre. Now, I mean, the question is, how long is it going to last? I suppose we should say, let's enjoy it while it is. I'm not convinced. I still think we're going to have some rocky roads ahead, but what it's saying is certainly international markets were reaching those levels at which earlier in this year they would have turned around and retraced the Dow back into the low 10,000s and the like, and now it looks like it's actually going to put an assault on the 11,000, which does indicate a slight change, and if nothing else, that channel we've been trading in is drifting upwards rather than downwards or flat.
And gold we've got at $1,282 an ounce a short while ago, but we've got the gold stocks slightly under pressure. We've got Harmony at the bottom of the top 40, down 1%. We're going to see continued volatility in these gold stocks, aren't we?
We absolutely are. And I mean, let's touch on gold first. As you said, 1283 looking really good. All-time high today in US dollars. Of course, not an all-time high in rands, with the rand down at 710, 11, 12 and trading around that area. Gold looks set for an assault on 1300. The gold miners, of course, the costs are hurting them. The rand is hurting them. The only thing really going in their favor is that US dollar gold price. Goldfields even came out with a decent announcement today looking at the Philippines. They got an option. It's a long process, but it's gold and interestingly also some copper assets. And copper also threatening those all-time highs, and in fact, as you said earlier a moment ago, potentially going through $8,000 a ton. So gold stocks still volatile, and frankly, I mean, Harmony's still in the 70s. I think Harmony's been in the 70s now for years and years.
Looking at Naspers, that company out with news flow. They're buying a controlling stake in a US company called Multiply. It's an online shopping site and a social networking site simultaneously. Very interesting that their strategy has been largely around emerging markets. Do you think we're now starting to see them shift? Why would they be entering into the US? Because we know that there are not many South African companies who've really managed to get traction in that space, are there?
Yeah, I mean, you know, the social media and the like is what they do. It's what they've got in East Europe, Russia, China and the like, certainly that space. But as you say, they've always focused on emerging markets. This is their first sort of real foray into an emerged market. And I mean, a couple of things. They're moving into a brand that's established, got traction and doing well. So I suppose they can bring some expertise. They've got some synergies. DST, their Digital Sky TV, which they've got a stake in. It's got a stake in Facebook, which is obviously an emerged market primarily, and I think they may be looking at synergies and expertise, but it is definitely a shift, and it's a shift which I thought the market was relatively bullish of. I would have stood back and said, hang on, this is different and it's not significant, but it could be in time, and let's take a bit of a wait and see. That said, I mean, Koos Becker and his team have pretty much everything they've touched has almost turned to gold. They've done their homework, I imagine, and an interesting move, and if they can pull it off, it significantly changes things for Naspers, and it won't be the first change. They've done very well with acquisitions.
But from a valuation perspective, Naspers is expensive at 312 Rand. Do you concur?
I do concur. I would much prefer, I like Naspers as a company. It was one of my picks for the year. It's doing well, but if I want to be a buyer, I want to be down at the 270, 280. And earlier in the year I was saying 250, but to be honest, it just looks like it's not going to get back there in any hurry, if ever. So the 270, 280 more comfortable. 312, wrong side of 300 for me.
Let's talk about the recovery that we're seeing in the financials today. Just looking at some of my numbers, Investec is up 2 2/3%. Standard Bank up 2%. Old Mutual we've got up 2%. And it looks as though First Rand there is up 1 2/3%, with ABSA trailing the other big banks up only 3/4%. Is it a sustainable recovery in financials?
It's a good question. I mean, they were definitely the big winner today. What we're still tending to see is flows happening, and it's almost to follow the leader. And today it was the chance of financials. Last week it was resources to a fair degree. It's been industrials doing very well the week before and a couple of weeks before that. There was good buying going through. Some of the volumes were fairly significant. And it's a case of when stocks get ignored and we see some selling off, which we did last week in the financials, it hits those value areas and people start jumping in. We're still largely trading, and in our market as a whole, if we look at that all-share index, we're still largely trading in that band we have been all year, which is when it gets to around 26,000, it's pretty much bottomed out, and when it gets to around the 29,000, it's pretty much topped out. I think we closed today at 28,700 or there's about on the all-share. So we're at that critical point. I said earlier we're seeing breakouts on international exchanges. The question is, are we going to see it locally? And if you'd asked me that last week, the answer would have been, I don't think so. But I think we might actually get it, if no other reason that we're seeing it globally, that enthusiasm is going to flow through.
What about the risk posed by the looming FOMC meeting in the US tomorrow? Surely that could bring some downside to the market if market players don't like what they hear.
Short answer, absolutely. Certainly what we're seeing is that the market is saying not to worry. When I left my desk just before the interview, the Dow was up over 100 points, trading at 10,700. Certainly it was saying we're not worried about that Federal Open Meeting Committee meeting tomorrow. No worries at all. But, I mean, make no mistake about it, Ben Bernanke and his fellow committee members can say something that will spook the market. I think the market is taking a bet, well, obviously, that it's not, and I think they're probably fairly right. I mean, pretty much he's not going to change interest rates. He's already said that they're keeping a close eye on inflation, and more importantly, he said pretty much we will do whatever it takes to keep this recovery ongoing, fragile as it is, to keep it pointing in the right direction. He could come up with some more pieces of data, and I would thinking particularly around the inflation space that could spook the market. Unlikely, but certainly possible.
Simon, it's no secret that it's getting more and more difficult to find value in the top 100, top 400 companies on the JSE All Share. Anything that stands out for you in this time?
In this immediate point, as we're standing here, at this point in the month of the year, I'm not out there aggressively buying. There's still some counters. I mean, Discovery springs to mind. I was running the numbers on Discovery, and with those growth numbers that they've had coming through from the last two set of results, they're sitting on a historically low PE for themselves. They're not going to do the same levels of growth going forward, but if their growth falls off by 30 or 40%, they're still well ahead of the curve. They're still offering value or using PEG ratios and the like to value them, but those stocks are few and far between, and it comes back to that, in the past we've been hitting the 29,000 on the all share and pulling back. I think we might not this time, but I would still anticipate a pullback at some stage in the next couple of months. Something's going to happen that's going to spook the market. The one area of big value is construction, but I'm still thinking in the construction space. There's some nice stocks there, but we can stand back and there's no rush. Construction's probably going to be cheap for the rest of the year.